Morning, everybody. It's Hubert Johnson here with Guardian Tax Law. Just following up, got an interesting topic today. We're going to be talking about property taxes and sales taxes. So this isn't a normal topic that we touch on. Haven't covered it before, but again, it's something that affects pretty much everybody out there. So, and we're going to talk about how we're seeing changes and how it's affecting people across the country. So, not only through being able to purchase and afford homes, but also to be able to manage it long term. So stay tuned with us, and we'll be right back after this break. Welcome back, everybody, and sorry for the microphone. If we're going to focus on sales taxes and property taxes, and those are two things that again surprise a lot of people. Property taxes again have been in the news a lot. We have a lot of news talking about property taxes and other taxes going up. So everything's getting more expensive, and when we talk about home rental prices, but also property taxes, it all affects the underlying. It all is being affected by inflation, and it takes a while for that to go through the economy, and that's just how inflation works. That it hits one thing after another as it flows through an economy, mainly because some things show inflation much later and are priced into the market with increases later. So we're just going to go ahead and dive in. First article is about inflation. I thought was a little funny. Um, should have a little fun. It's a Halloween today. Today's the 31st. And let me go ahead and grab the right article here. I have too many articles here. Subway. This is from Fox Business. So this is supposed to be a little bit of fun. Someone is claiming that Subway is shorting them on meat, that what they show in their advertisements, they're showing Subways packed with meat, brimming with meat, 200% more meat on average than what actually comes in their when they order a sandwich. So they're saying that it's false advertising, and any fast food part. When you look at a hamburger, it's made to look as good as possible. Most of those hamburgers and most of those what's displayed to you isn't even real. It's fake food designed and painted to look like the best, juiciest hamburger. But if you actually went to take a bite out of it, it's inedible. It's not even food. So we all know the advertising companies do this. I mean, if you didn't know that, sorry, just burst your bubble in life. Um, and I'm not a fan of Subway. I lived in New York for a little while and had their wonderful, amazing delis that are all over the place. And after having New York delis, I've barely eaten at Subway since. Once in a blue moon, but honestly I try to avoid it just because I know what real deli food is like. Um, so again, due to inflation and high food prices, again, it's they're claiming that they've cut back on how much meat is actually on their sandwich. So and they've seen that many other sandwiches have much less meat than advertised, like the cheesy garlic steak. So um, I'm laughing here because everybody's doing this. It's if you're surprised that there's less meat and they have it portioned out, um, how much meat actually goes on a sandwich. Don't shop at Subway. So I think this is kind of funny, but again emblematic of shrinkflation, and I think someone tried to go after him for not having 12-inch foot long sandwiches, and I think they were like 11.5, um, or not 12 foot, 12-inch long sandwiches, or a foot long sandwich. So anyway, a little bit of fun to get us started. The next article, a little more scary, And this is the IRS comes out with this and says, "Oh, look, we're hiring new people to focus on partnerships, schedules, S corporations, trusts, and estates." So this is not large corporations. This is to go after smaller businesses. Most partnerships are smaller businesses. It's not C corporations, not your large corporations that they're going after. Most of them get audited most years anyway. But this is S corporations, trusts, and estates. So, and again, this is someone being hired and promoted within the IRS, but they're building this team nationally to go after businesses and to put more emphasis on going after smaller businesses. So that is a scary thing. That's the direction the IRS is going. If you think they're just going after big businesses, that's not where the money is. They get audited most years anyway. Um, so again, just something to be aware of. We had a new news source pop up, the Daily Economy, and we have a few interesting articles here. And this one, again, this article is talking about Amnesty and Medicare. So while we do talk about politics, we try to focus on how it will affect our country altogether. And I just saw someone the other day ranting that Republicans wanted to cut Medicare. There's a lot of rampant abuse in Medicare. But this really talks about how if you make Medicare for all, and this really is a step towards single payer, where you get rid of private insurance and everybody has access to Medicare. What's that going to do to the cost of Medicare? So we've known that Medicare is going bankrupt. Why? Same problem with Social Security. You have a lot of retirees. People are retiring in much greater numbers. And you have the baby boomer generation that didn't have babies nearly as much as the previous generations. And we're just having fewer kids. So that puts a huge strain on social welfare programs. So, and her support for expanding social welfare programs like Medicare for All and amnesty, blanket amnesty for undocumented immigrants is a huge concern for our current social welfare programs. So Donald Trump is pushing not only for stricter immigration laws, but to enforce the ones that we have. Again, legal immigration is essential for economic growth, and the Democrat argument is that we need all of these illegal immigrants coming in. That's yet to be seen. I don't think that's proven, and a lot of people disagree very sharply with that. Amnesty, blanket amnesty, and making them, immigration or Medicare for all available for the millions of people that have come into the country illegally could bankrupt the system. So currently, Medicare is already in trouble. It's projected to be insolvent by 2036. Around the same time, 2034, Social Security is supposed to run out of its trust fund. And if nothing happens, nobody does anything about it, there's going to be about an estimated 21% haircut to Social Security. So you have millions of Americans depending on it, but they're not contributing to it anymore. It's current workers that are paying into it. So the concern here is if you add 11 to 12.45 million undocumented immigrants to it, that would add $1.8 trillion in cost to the Medicare program over time. Again, it's just going to take this financial collapse and accelerate it. It's a pay-as-you-go system, which means today's retirees are being funded through payroll taxes. But again, you have worked well when you had a younger population, more workers, you had a healthy worker to beneficiary ratio, but that hasn't been the case for decades. So you have, it's just not bringing enough revenue. It just isn't. It's too expensive. And adding more millions more would only exacerbate the problem. And that's the main point of the article. Um, so in the past, she's proposed Medicare for all would cost a staggering 44 trillion over the next decade. So about 4 trillion. Yeah, about 4 trillion a year. Our total revenues this year were 4.9 trillion. Broke records. Most revenue ever. And most of it would be swallowed up in a Medicare for all program. So this is if they actually do this, um, it would bankrupt our budget as well, which is we're already spending 2 trillion over it, and it would add another 2 trillion more to the current overspending. So again, it's just not feasible. You'd have to have massive increases in taxes, which again, the concern here is that um, it will really do some massive economic damage. So part of the reason of allowing and bringing people into the system, a lot of immigrants, is that the younger, higher skilled legal immigrants are huge, not positive for it. They feel crucial labor shortages, but these are people coming that are highly skilled, making good money, and paying taxes. Um, but again, it's based on visa auctions, other situations. But if you just let in vast numbers of people that will be relying on that, it just kills it. So to close this article up, it's a phrase by Milton Friedman that you must choose between a welfare state and open borders. Because if you have both, it's a recipe for disaster. And that's mainly because we're offering benefits that the rest of the world doesn't offer, can't offer. And I don't have a problem with people coming here for a better society, more opportunity, better school system. But it has to be sustainable, because if it bankrupts the system, we're only hurting the people coming here and future generations as well as our own children. So um, don't kill the golden goose here. Next article, and we're running short on time. Just going to introduce it. So realpage is an algorithm. It's a program that renters, realtors use, and landlords use to kind of determine what would be the market rate for renting homes. And the Department of Justice is suing them because they think they're part of an antitrust, or affecting or reducing competition because nobody's really competing with it. We'll dive into this article when we come back in a couple minutes. Welcome back, everybody. And continuing on with this next article about realpage. So realpage, as I mentioned, they put it together. It's an algorithm. It's a computer system to help people determine and better understand current market conditions in setting their rates or their rents. And the Department of Justice under President Biden and VP Harris, are claiming it violates antitrust law. And the main reason they're coming after it to highlight, look, we're fighting for the little guy we're trying to rent because the rent is too darn high, right? We've all seen that saying. But the DOJ assistant AG heading this up said the modern machinery of algorithms and AI can even be more effective than smoke-filled rooms of the past, where there was collusion and people setting prices instead of letting the market and people figure it out on their own. So again, it's been a big push in recent years. Ironically, in 2017, when they really expanded They went through antitrust review and they were told everything's fine. But again, it's the very end of the Biden administration. How much is this is for politics? How much of this is due to um, what's actually happened on the ground? And taking this away from people, again, it makes it a guessing game, especially when um, costs are going up. So, one of the articles they say, look, when anything is good, politicians point their fingers at it to take as much credit as possible. When everything bad, their index fingers find another target with an eye to who can most effectively be scapegoated. So, and it's going to be a very high pitch going into November. Look at these greedy landlords. Look at the greedy corporations. Look at the greedy businesses. That's why we have inflation, not massive government overspending. So again, it's trickles down through the economy. It's, one, real estate has been jumping like crazy. We've seen all what happened to the price of housing, and it all carries down to other areas of the housing market as well. So again, where you have more and more demand, people can't purchase homes. You have more demand for rentals. And one of their concerns is that there's a huge gap legally between accusations of violating antitrust law and proof of harm that violate antitrust law. So again, goes into what's required by the law for an antitrust case. I'm going to skip over that. But some of the costs, and this is where it talks about the effects on rents from inflation operates with a lag, because rental contracts are frequently renewed only annually, and small landlords often keep rents below market rates to avoid losing good tenants. Seen that plenty of times. Because the cost of dealing with that bad tenants, if you have a good tenant that's making you a profit, you can afford it. Landlords will often keep prices low to keep a good tenant in there because it's profitable. They can lose their shirt and lose a lot of money from bad tenants that destroy property, that don't pay. It can be a real headache to get good people. And those costs and protecting bad tenants, laws that protect bad tenants, only make it more expensive for everybody else. So RealPage's tools can accelerate that adjustment by conveying those market adjustments otherwise, but still, people can't just raise the rate. They have to wait till the lease comes up if they're going to do that. But if you have vacant units, those are the ones that are more likely to be filled at more competitive prices. So, but they also hasten rent reductions and housing downturn. So it's not just an upwards pressure, it can be a downwards pressure as well. Usually prices go up with slight inflation, which is a different thing. So again, the DOJ is still going after them. We'll see what happens, especially after an election. That might go away. But the costs of maintaining property have gone up. The utility costs have gone up. Everything's gone up when it's come to housing. And the next article is about property taxes jumping 30% nationwide since 2019. And who pays property taxes? Landowners, homeowners. So if you own homes, that's part of the reasons that prices are going up, rents are going up, is because property taxes are going up. Why are property taxes going up so much? Because everything's more expensive. And cities, again, Jacksonville and Tampa, their property taxes have gone up 60%. Nationally, it's a jump at 30% because the cost of doing business, of providing for schools, housing, or roads, public services, all of that has gone up with inflation over the last few years. And so property taxes are jumping up. and have been jumping up since 2019. So in the past 5 years, we've had this huge increase, and it hits everywhere. Now it says the taxes declined in only two metros: Las Vegas, which is surprising, and Pittsburgh, Pennsylvania. New York and New Jersey had the highest tax bills, um, and it goes into some of the numbers here. Don't plan to really go into this article. I've already spent a lot of time talking about this, but again, just be aware that it is, and it's going to affect the next topics as we go on. So here in Pennsylvania, um, they're arguing for a 46% property tax hike in Allegheny County. I'm sure I'm saying that wrong, but in Pittsburgh area. So if they don't get millions of dollars, new dollars coming in, the county could go bankrupt. Now, who collects property taxes? Counties, small government, or counties, small cities rely on property taxes as their main source of revenue. So again, this is for first proposed increase in 12 years. It's overdue. Sorry. But again, they want to increase the rates, and property taxes go up every single year. When their property gets renewed, our property taxes just jump by $40, $40. But again, it adds up year after year. But they want to increase the rate by 46% as well. So property is more expensive, and you jack up the rate by 46%. That's going to make a huge difference in what people are paying. And again, they have an $80 million budget shortfall. And so we're talking millions of dollars for the county. And they're saying it's only a 4.5%. So a lot of it, the numbers are, if you increase it from 2% to 2.5%, if it could only be 4.5% increase, it's just funny how you slice it. The numbers can be very different, but it's have until December to approve the budget, and you'd have to have 10 of the 15 city council members to approve it for this to pass. But we're seeing this not just in Chicago. We're seeing this all over the place. And I mentioned before how the mayor of Chicago has the same issue. A $982 million gap for 2025. And when he was campaigning for office, he vowed not to raise property taxes. He gets there and he's like, look, we either have to cut this like crazy, which he doesn't want to do, or we have to raise property taxes. And it's close to a $1 billion budget shortfall for Chicago. And again, one of the big issues is federal pandemic level aid is running out, temporary help, but long-term, spending went up to match all the extra money coming from the feds, and that's creating huge budget shortfalls as cities relied on that. And it's again, you have pension costs for the corporate fund, as well as a huge increase in the levy biggest increase since 2016. Nearly 80% of city property taxes go to its underfunded pension funds for public employees. So again, it's facing cities, facing people across the country. And we're going to jump to a different article, but again, affecting property taxes, affecting property and small companies. So we're going to jump across the pond here. And I thought I was sharing the last article. Let me jump back to that. So I feel like time is just flying like nothing else today. So if I wasn't sharing it, here's an article about Chicago and the Chicago mayor. And the next article, we jump across the pond to England. Now, why does England matter? Because, again, they have a very similar taxation system, pretty much everywhere there, property taxes. But here they're talking about drastically reducing the inheritance tax cap relief cap, and that's something we're talking about here in the United States. That's something the Harris campaign has said repeatedly, that they are for reducing the inheritance tax cap down to $3.5 million, which actually is very close to 1 million pounds. 1 million pounds is around $2 million. And what happens when you do that? Right now, it's currently around 13. When you drop it down, who gets hurt? Smaller family-owned businesses, family-owned farms, and again, this is passed. This drop in the inheritance cap passed in England, and the farmers are throwing a huge fit about it. Very upset about this. So, so basically, any farm over 1 million pounds will be subject to this tax. The National Farmers Union said this would be disastrous budget for family farms and basically destroy the next generation's ability to carry on producing British food. And the farmers would be forced to sell land to pay the tax. So either reduce the size of the farm or sell it altogether. And this is the exact same thing, an issue that we're having here in the United States. So sometimes looking at what these laws are passed or changes in law are put through, we can see what's going to happen and get a good idea of what will probably happen to farmers here in the United States. It really does devastate family farms and smaller businesses. So they're claiming there's been no inheritance tax on combined business and agricultural assets worth less than £2. There will be 50% relief, an effective rate of 20% from April 2026. So when someone, a father, grandfather, whoever owns the farm passes away, they won't be able to keep that in the family, pass that on to the next generation without paying a 20% tax of the value of the entire farm, above 1 million pounds. Most family farms are over that amount. So again, it's something that you already have farmers telling their children, do something else. Go into something else other than farmer. That would be completely unviable because you'd have to pay such a huge tax. It really would kill most businesses, and it forces them to sell. And who's always ready to buy? Corporate farms. And it's the exact same argument here in the United States. They have the cash, they have the money to come up and snap up these smaller farms. And again, people say they don't like mega farms, but these changes in laws benefit corporations that never have to pay an inheritance tax because they're owned by the corporation. Again, you don't have anybody dying, so it disproportionately affects family-owned farms where they're owned by individuals, and a lot of these, when they dropped inheritance taxes to target the rich, but you have people that actually farm and work the land and actually own and build businesses, and then you have people that have investments. So there's a way that tax investments, the capital gains, what other forms of taxation, rather than singling out enterprises that are owned by families and passed from generation to generation. And she said longevity and generational thinking were often key motivators for farmers to take care of the land. And when you go to large corporations buying up and taking over most of the farming, that could be lost. A lot short-term thinking as you're looking at profits. And I mean, it wouldn't make it available to newcomers trying to get into farming, but it would essentially it would mean the end of smaller family farms. Here in the United States, we have a big push for range-free, organic farming, etc. A lot of smaller farms trying to compete and carve out their own niche. The same kind of inheritance taxes would be very devastating for them as well. So estimated 70,000 farms throughout England could be adversely affected by this. puts dynamite beneath the livelihoods of British farming and flies in the face of growth and investment. So again, moving on, it want to focus on, lastly, and this is our topic of the day that I'm introducing, how to deal with property taxes. How do you prepare for these issues with inheritance taxes, etc.? I mean, the best way to prepare for it is know what's coming. And the problem is when it changes drastically. Now, on one hand, I want to fault the Trump administration when he was in office for making these temporary, set up a bomb. I mean, people took advantage of it. They enjoyed it for a time, but I don't know why they make these sunset and don't make them permanent in the first place. It makes it much harder for people to anticipate what's going on. Whoever, if they make them automatically expire, it's so much easier to just let them expire rather than actually have to pass anything. So property taxes, and this is something that I do want to focus on. Most people don't understand that property taxes are all about local taxes. And it can be very difficult to understand all the different layers of taxation that people face. So just to do a little bit of an overview, you have income taxes and payroll taxes that are collected nationally at the IRS level. I'm going to go ahead and stop sharing this for a second while I give this overview. And that's collected and managed by the IRS. And then you get states. States also collect income taxes, payroll taxes, and then sales taxes. And then they do excise taxes as well, taxes on the sale of liquor, tobacco, etc. So there's no national sales tax. So it's just really the two main taxes the federal government collects are corporate payroll taxes and individual income taxes. If you step down to the state level, it can be very similar, which is why a lot of people can get confused. Not all states collect income taxes, but most states do. And then you also have the sales taxes, and then property taxes. You even get more local, all the way down to the county and city, which is why we don't typically represent people for property taxes, because you'd have to know the rules and how to negotiate with every county in the country, which is unheard of. So we're going to get right back to this after this break, and we'll see you in a moment. Welcome back, everybody. And just going to share that article again, talking about how to deal with property taxes. And it's coming from a landlord perspective, but a lot of these are very applicable to individuals. And you just have to understand that these are local taxes. So again, this talks about Arizona, but again, this is true across the country. And if you own real property as a landlord or as a homeowner, you have to pay property taxes. And this is pretty much true everywhere. What happens if you don't pay your property taxes? Then your overdue amount triggers a lien on your property. So this is a tax lien, very different than an IRS tax lien. So you have IRS liens or state liens for state taxes and federal taxes that are overdue. The IRS typically is the one filing tax liens. And then, but that just attaches to the property until the property is sold, titles transferred, etc. Property taxes can lead to the sale of your home. So it makes the property act as collateral for the debt. So if you don't pay the property taxes, eventually your property will be sold. So are there alternatives? Are there ways around this? There's ways to address this. So again, you have tax deed states versus tax lien states. Minor differences here. But how does Arizona handle property taxes? We're going to focus on Arizona. So that they're held tax lien sales are held every February. That doesn't sell your home. It means someone else they get ownership of the tax lien. Whoever purchases the tax lien at a discount, all of a sudden now they own the tax lien, and it's up to them to enforce the tax lien and take election action, eviction actions, etc., with the tax lien. But you do have a period of redemption. So you can redeem the property by paying off the tax lien. You can sell the property and pay off the tax lien, etc. You get a 3-year redemption period to pay off the tax debt, and most states will have a redemption period. Again, watch out because there's legal changes to this as well. And so when you redeem your property, you just keep it full and sell. But what happens if your mortgage is sold on a tax sale? Property tax liens have priority over mortgages and deeds of trust. So if you lose your home to the tax sale process, the mortgage gets wiped out. You have to make sure, and it doesn't matter if your loan is escrowed, they'll use the advance money to pay the delinquent property taxes first, and then anything else goes to the mortgage. And then most mortgages have that within the escrow. They have a part of that to protect the mortgage. And so if it's part of your mortgage, then they can foreclose. The bank can foreclose on your home for failure to pay property taxes. So what options do you have? Again, better to take action sooner rather than later. If you know you're struggling, deal with it sooner rather than later. There are tax abatements available, and you can file an appeal with the county assessor to challenge your home's value and try to get your property taxes lowered. It's one of those things, there's not a lot that can be done. And so a lot of times hiring a professional, unless they really know what they're doing, I would make sure you talk to them and see, okay, what are you familiar with this county or how things operate? And again, it's hard to find someone that will help because it's too localized, and we deal with cases all across the country. It's not something we have deal with. So who would you normally contact to help with local sales like that and local property tax issues? A real estate attorney. So a lot of people don't understand that when they're looking for someone in the tax area, a tax attorney or tax representative to help them, most of the time the best person to talk to is the real estate attorney when it comes to property taxes. What options do they have? How can they help them? Is it worth even hiring somebody? So jumping to our last article of the day, and this is the one I first pulled up. This is from Nolo, how to manage property taxes. And this goes into depth from a landlord perspective of how to manage property taxes. And if you're in this situation, you need to contact a real estate attorney. I know some. They're a little bit of a rare bird, just like tax attorneys, but they can be found across the country. And locally, I actually know a few here in Arizona and Phoenix area. So if you have questions, you can always reach out to us and about property taxes, and we can refer you on and make sure you get someone that can help you or give you good advice. So landlords who have rental property or anybody that owns property, it's important to understand, first of all, understand how property taxes work in your locality. So wherever you are, what the requirements are, what the rates are, and how they are assessed. So you have different types. So this really goes into rental property taxes, and it goes beyond just property taxes. So we're going to touch on this on the other parts of it, but we really want to focus on the property taxes here. So they're typically based on the value of the property and collected by local governments, city and counties. And it depends on the value of the property as assessed. You can contest the assessments. If anytime you're running a business or renting anything, treat it like a Schedule C, and you have to pay income tax on any profit off of it. So it includes normal rent payments, advance rent, security deposits, and fees. Anything that you collect that you don't return has to be returned. So, how are rental properties calculated? Um, well, you have sales taxes, then you have the taxable income. But look at deductions and exemptions. There's a lot of deductions and exemptions. Um, and that's why if you are engaged in this business, it is a business to rent property. You should be talking to a CPA or a tax preparer that has experience dealing with rental property. And again, if you need a good one, we have plenty that we can refer you to. In some states, it could be subject to sales taxes as well. Not all states. It really depends on the state. And not most states don't charge sales taxes on services. Some do. So be aware going into this taxable income. It just goes on your federal tax return. Just make sure you have someone that knows what they're doing. There are deduction exemptions for renting loan, such as you might have a homestead exemption. You might have property repairs, advertising expenses that can be reduced from your taxable income. So going into this, you be prepared for the amount of property taxes on your property. And then just kind of list everything out that can be taxed. And just, it's important to go through this. Again, this article is going to be linked to our website or our YouTube channel, where we provide the links for every single show that we do. And I highly recommend, if you are a landlord and you're not sure this is news to you, to go through, or if you're considering being a landlord. And this applies to people doing Airbnb as well. So you have to keep accurate records of rental income and expenses to get credit on your tax returns, but also for deductions and exemptions, and to manage rental property taxes. So you have exemptions and deductions of depreciation, mortgage interest, repairs, and maintenance. So it's key here to keep good records. What is a repair versus what is maintenance? And with depreciation, you can deduct the cost of the property over time for tax purposes. This can reduce how much you're actually paying on income taxes, as well as mortgage interest. Well, it can reduce how much you're paying on property taxes, as well as can figure into on your depreciation on your income tax as well. So mortgage interest can reduce property taxes. And then repairs and maintenance is very key to show how you maintain the property. And then filing this, again, if you're not working with the CPA or tax preparer with this kind of experience, make sure you contact someone. If you don't have someone, give us a call. We can put you in contact with an excellent CPA that will help you go through this. It's for the IRS. April 15th of each year is the deadline. If you have an extension out to October 15th, but the deadline to pay is throughout the tax year. So if you do have income and you're not making estimated tax payments, the penalty is 8% on any unpaid taxes throughout the current year. So if you don't pay estimated taxes throughout the year, you hit April 15th and pay it off, you're still going to get hit by an 8% penalty. So required forms 1040, 456, 4562 for depreciation. And again, keeping accurate records is absolutely key. Especially as a business, you should treat it as a business. You have to keep those at least 3 years in case of an audit. And it also touches on how to appeal rental property tax assessments. Assessors get it wrong all the time. They go through, they're usually good at what they're doing, but right now, especially throughout the hurricane areas, they're going through and reassessing property that's been damaged, that's been the property has been devalued because of the hurricane. If you have anything that happens on your property or some serious damage to your property, the value could go down. So again, the number one reasons to file an appeal is that the property value is too high or the property has been improperly classified. And this is one of the big reason why property taxes are going up so much across the country, is that tax assessors are reevaluating the value of property, especially if you purchased before 2022. Again, and prices just climbed with the demand, 21 through 2022, and a lot of people are contesting these assessments. Again, it's all a local appeal. Contact the local tax assessor's office and you can ask, how do I file an appeal? You should get something in the mail anytime you get a notice of increase. There should be instructions on how to file an appeal as well. You can submit it along with any supporting documentation. If this is also something you can contact a real estate attorney for assistance with, or to get some advice as well. So again, key to a successful appeal: evidence, evidence, evidence. Get as much evidence to support your case. You can get a separate appraisal, recent sales data, and photographs of the property, because when they're doing this, they're not going out to every single house and looking at every house. They're doing based on the areas. And again, every county is different, but if you have specifics about your property, you can definitely, and you have the proof to back it up, that's the best way to have success on appeal. So, and again, detailed explanations, not the more detailed you can get, the better. Again, having an appraisal, a professional appraiser come in and do a separate appraisal. It can be worth its weight in gold, because if you have a neutral third party coming in and explaining why. So again, there's a summary here. Rental property best practices. Understand it. First understand your rental property taxes, but also your home taxes, and stay up to date with state and laws and regulations. When property tax laws are being proposed, you should be paying attention to it if you own property. But even if you're a renter, it matters. A lot of people think, hey, we'll just hit property, and I'm not a property owner, so we'll just tax property more. It affects the rent. It affects you as you go through it. Work with a tax professional. And again, if you don't have someone and you don't know who to trust, give us a call, and we'll send you a referral. We refer to people all across the country too. Recently, we referred someone in New Hampshire, someone else in Chicago. We have CPAs in New York we refer to. We've referred plenty of people in Florida. So again, if you have those questions, you need some good advice, give us a call. If you are renting your property, if you are Airbnb or doing anything like that, use accounting software. Can help immensely in maintaining and helping you pay a lot less in taxes, and again, get those deductions on property taxes as well. So again, if you make it easy, you just put your information in and it'll help organize it. So again, minimizing rental property taxes, maximize deductions, properly classify expenses, and then use tax advantage invested strategies that you'll get from a tax professional. So again, claiming depreciation, deducting mortgage interest, claiming repairs and maintenance, and deducting operating expenses to actually run your business. So we're almost out of time, and we're going to be posting this for your information. But if you have questions, give us a call, 520-485-7371. We don't handle property taxes, but we see this affect a lot of people, and we know who can help you to make sure that you are taken care of. Thank you, and have a great day.